Enphase just reported their latest quarterly figures. The stock is down currently close to 8% after hours. It was a double miss, maybe even a triple miss because guidance was also lower than what the analysts were expecting. And so even if we go to the full year expectations from the analysts, sales-wise, it's at $1.4 billion. And now if we add up all the quarters plus the guidance that was given, the midpoint there, we're missing around $117 million in revenue. Definitely not great. Now, Enphase, we've talked about the stock a couple of days ago. Shared my opinion on the company. If you missed that video, it's going to be in the top right corner. Year to date, the stock will be down now more than 30%. It will have a forward PE of 24.8 times or so and a market cap close to $12 billion. Now, we knew that 2024 is going to be a difficult year for a company like Enphase because of, high interest rates environment and stuff like that. And so you see the expectations and, the results as well, right? Sales down 40% year over year, EPS down closer to 45% year over year. But why do you buy a company like Enphase? Because you think we are close to the bottom and fiscal 25 and fiscal 26 are going to be much better than right now, which is also basically what the analysts are expecting. Of course, some analysts still think that 2025 might not present the growth that we are seeing here from all of the analysts' expectations, right? 42.7% year-over-year growth for sales and 84.2% year-over-year growth for EPS. Some analysts think that it will take more time. Plus, there's more competition. There's also Tesla's Powerwall 3 that is having great success. So you have to take all of that into consideration. But we are talking here about a company that is expected to grow, that is still growing profitably, free cash flow positive as well, in a big market. Now, of course, previously in a 0% interest rate environment, these types of companies usually do very well. So you could say that maybe right now residential is not going to do well until interest rates drop to 3% or maybe even below that. And that's why you're not buying the stock, because you think it's going to take a while until we reach that point. And until we reach that point, you don't see the company doing well. Okay, could be a fair point, but I do think that there are still a lot of folks around the globe that will be happy to buy products from Enphase even when interest rates are at 4%, 3.5%, around those areas. Of course, the lower the interest rates, the better it will be, right? So before jumping into this report, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So if you've missed last video, this was basically what I showed before. Enphase had huge growth thanks to, first of all, them being a smaller company, and second of all, interest rates being close to zero. You saw huge growth there, but then sales growth has decelerated by quite a lot, should reaccelerate in the coming fiscal years, and the same thing should happen with free cash flow. But like I said, if we look here at the $1.4 billion that's expected from analysts, they're not going to get it unless, of course, Q4 is a huge surprise and it beats their number quite comfortably. Now, looking at this quarter specifically, they shipped 1.73 million microinverters, or approximately 730 megawatts DC and 172.9 megawatt hours of IQ batteries, which is more than last quarter. Quarterly revenue came in at $380.9 million, below the estimates. GAAP gross margin of 46.8%. You're going to see the comparison in just a second. Free cash flow was $161.6 million, and in cash equivalents, and marketable securities of $1.77 billion. So quite comfortable position for them. Here you can basically see the comparison year over year on a GAAP basis, non-GAAP basis as well, and quarter over quarter. So quarter over quarter revenue is up yet again, which is great. Probably Q1 was the bottom revenue-wise. Now, with guidance, we're going to see that Q3 and Q4 remains unchanged. So, maybe that's the positive, right? That revenue has bottomed already a couple of quarters ago, and now we're making our way back up, but slower than expected. If you look at gross margin, quarter over quarter, it's up. Year over year, that's down. Net income down heavily year over year, but up quarter over quarter, and the same for EPS. They say here total revenue for the third quarter was $380.9 million compared to $303.5 million in the second quarter of 2024. Our revenue in the United States for the third quarter of 2024 increased approximately 43% compared to the second quarter of 2024. The increase was due to higher shipments to distributors as inventory returned to normal levels. So that's great. But revenue in Europe decreased approximately 15% for the third quarter compared to the second quarter of 2024. The decline in revenue was the result of a further softening in European demand. Now, previously, we have seen Europe actually grow a little bit. So getting these comments, of course, is not great. Moving into Q4, the year-over-year comparisons will be looking much better because, well, we're going to start to lap the weaker quarters. So on the year-over-year comparisons, things should be looking better. Of course, we would have liked to see guidance be above $400 million. Now that's between $360 and $400 million for Q4, so $380 at the midpoint. This also includes shipments of 140 to 160 megawatt hours of IQ batteries, GAAP gross margin to be within the range of 47 to 50%, that's with net IRA benefit, and non-GAAP gross margin to be within the range of 49 to 52%, also with net IRA benefits, and 39 to 42% excluding net IRA benefits. Now, I do want to touch on the share repurchase program. So in the third quarter of 2024, they repurchased 434,947 shares of their common stock at an average price of $114.48. Of course, now the stock is much lower, right? Under $90. So yeah, maybe not that great, but then again, this should tackle dilution, of course, and over the long run, the less shares available, the better it will be. But you would definitely like to see them buy shares at a much lower price instead of always buying at a higher price, because we've seen this in the past where they've been buying 120, 125, maybe even closer to 130, and then, well, the stock kept on going lower and lower and lower. But okay, maybe a couple of years from now, we're going to see the stock at closer to $200. I'm going to say, okay, fine. Same thing we've said with Meta. I know it's not an apples to apples comparison, but even with Meta, myself included, and a lot of people have complained about them buying back some shares at $300, $350 or so. Well, guess what? It's now much, much higher and a much better company as well. So we'll see what happens. But yeah, I just wanted to touch on that. Plus, I do want to show you another company, not really in the same space, but not really a competitor, because Enphase could be a First Solar customer. I haven't verified that, but yeah, this is basically the comparison between Enphase and First Solar. Enphase revenue basically peaked here Q2 2023. Since then, it has come down. This is on a trailing 12 months basis. And if you look at First Solar, it does not have the same issue, right? Basically, you're talking about one that is having, well, to deal with the residential issue, and the other one, well, doesn't really matter that much because Enphase could be a customer of First Solar, so First Solar is a winner no matter what, which is why you've seen total revenue for that company continues to go up and up and up. Looking at the graph right now, we can see that the stock continues to go lower in no man's land, basically. But if it stays like this on the daily, we are going to be oversold. There is a small gap here between, I would say, $78 to $83 or so. Right now, after hours, we're at $84.30. Remains to be seen if we will close that gap during that day. If we go quickly and look at the weekly, on the weekly, of course, we had that big green candle from the quarter back in November of 2023. And here on the weekly, we can see RSI is low, will be, of course, lower tomorrow. And maybe, yeah, it will have to go all the way to $80, $77 or so and see if we can form here a double bottom and then make our way back up. So Overall, yes, not the prettiest of the reports, right? Double miss plus guidance is a bit lower than expected as well, but still, in my opinion, a healthy company. Now, yes, this is maybe a company that will move in a quarter or two because, well, macro becomes a little bit better, interest rates keep on coming down. So that should benefit a company like Enphase. I know a lot of you have also talked about First Solar. Yes, I would say a more solid pick right now. So that's about it for this video. That's why Enphase is down. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one.